Hi there, Miranda Alt here with Keller Williams Success Real Estate and the Miranda Alt team with your Monday market update for Tuesday, September 5th, 2023. Thanks for watching. Hope you had a great Labor Day yesterday. It certainly was a beautiful day here in Illinois. Hope it was nice where you were as well and you were able to take a little bit of a break. Taking a quick look at our Monday statistics for yesterday from Montgomery County, we had 137 new listings hit the market in the last 7 days. We had 143 go under contract, so still a lot of homes going under contract, more going under contract than newly listed. We had 136 closed sales, 21 price changes, 2 expireds, and 50 currently on the private network. Now, comparing this to last year, so in 2022, our numbers weren't really all that different. Because if you recall, this time last year, we had interest rates climbing out of the 4s, which now seems like the greatest deal ever, but they were climbing really fast. And for people, it was a little scary. They were used to having 3 or 4% interest rates, and now they were going to be getting into the 5s and the 6s. And in October, we actually hit 7 for the first time. And that was a really scary time for a lot of buyers that just were not used to that and were very shocked by the rapid increase in interest rates. So this week, last year, we actually had 146 new listings, 153 under contract, 158 closed sales, 33 price changes, and 33 on the private network, and only 5 expireds. So, you know, the numbers aren't super different from this year to last year. This year, we only had 10 less new homes hit the market, so that's not really that bad. We only had 10 less homes go under contract. Virtually the same. We had 20 less closed sales, but again, closed sales is more indicative of what happened 30, 60, 90 days ago rather than what's happening right now. In terms of price changes, we actually had more price changes this year than last year. Last year than this year. And that's probably because this time last year, with rates going up, people were freaked out and were thinking, oh my gosh, they just weren't used to higher interest rates. And again, I have to reiterate that, you know, while interest rates are in the mid 7s to upper 7s right now, they really are historically low. And I know people have been saying this, and for a lot of people are like, yeah, historically low, blah, blah, blah. The thing that you have to remember, and yes, I know that interest rates are the highest they've been since 2001. 2001 was the last time we had interest rates as high as they are today. But what you have to keep in mind is that in 2008, we had home prices 21% above the average. Then we had that crash in the banking industry, and we had a huge recession, the Great Recession, not calling it the Great Depression, not wanting to freak people out, but it was bad. And I don't know how many of you remember 2011, 2012. I know I do, and it was tough. It was very scary, and it was not fun. It was not fun for my family, and I'm sure it wasn't fun for your family either. And that is when we started with these crazy low rates. So when we have really low rates, it means things are bad. So when we have high rates, just keep in mind, it means things are good. Okay, so now we are seeing inflation coming down. We have had new inflation reports that show that inflation is getting better. It's improving. It is slowing. We do have some job numbers that are coming in saying that, you know, there aren't as many jobs being created. We are headed for a recession. All signs are pointing to that first quarter of 2024, we will have a recession. And when we have a recession, we know that then interest rates come down. Some people are hoping that they will come down into the 6s. I would say that would be great. That'd be great. If we saw a 6% interest rate again, I think everyone would be over the moon excited for that. So just please keep things in perspective. That I know that 7% isn't your happiest, best rate ever, but it really isn't that bad, and it does mean that things are good. When interest rates are incredibly low, we are either in the middle of a really bad recession or a worldwide pandemic. Those are bad things. We don't want those happening again. How many of you want to relive 2020? I don't. Not even 2021. No, thank you. You can have your low rates and you can have your pandemic. I do not want any more of those. I would rather have 7% interest, a strong economy, and no pandemic. Thank you very much. So I would just like to, sorry for the rant, but I have to reiterate what low interest rates actually mean for our state of our country. Okay, getting back to some more interesting things. The Feds meet 3 more times this year. So interest rates, yes, it is the topic of lots of concern, mostly because of the affordability issue. When interest rates are going up and house prices and home prices are going up. Now, why are home prices going up? They're going up because we have low inventory. We have high demand, we have low supply. That is always going to lead to prices being increased. we are seeing an affordability issue that is consistent and it's persistent, and it's causing a lot of problems for people. So people who are maybe hoping to get a mortgage at $350,000 at 4%, they still haven't found a home, and now interest rates are 7%. They no longer can afford the same home that they could, or if they can, it's going to cost them a lot more every month. Now, some of those people are deciding to rent. Well, rent has also gone up rapidly. So it's becoming very unaffordable to rent, and it's becoming unaffordable to buy. Now, the thing to keep in mind is that when you buy, you're always making an investment in your long-term wealth. The number one way to build wealth in this country is through home ownership and through the ownership of real estate investment properties. So real estate is always a good time to buy the right piece of real estate. That's what Gary Keller said at our seminar a couple weeks ago, and it's such a true point. It is always the right time to buy the perfect piece, the best. It's always the right time to buy a great piece of real estate. And the reason being that it's almost impossible to time the market, and investing in real estate is a long game. It's not a short game. It was a short game for a couple years, and it really should never be. Shouldn't have been like that, but it was. And hopefully it won't be again, because it means we've got big problems. The Feds meet 3 more times this year. So the last 2 times that they met, they did raise interest rates. They raised the prime rate quarter of a basis point, 25 basis points. We're hoping that they don't raise the rates again. They meet again September 19th and 20th. Then they meet in October, November. It's October 31st, November 1st that they meet. And then they meet one more time in December. We're hoping that they don't raise interest rates again when they meet in September. We've got a lot of economists. Lawrence Yun from the National Association of Realtors, among others, is pleading with the federal government to not raise interest rates, just because if we see interest rates go over 8%, we are going to see the market react negatively. I think we're going to see a lot of people back out of the market and just go, forget it, it's just too expensive. So we don't want to completely collapse our economy. We want to keep things going, but we do want to keep inflation rates down. So hopefully they'll just keep steady. They won't raise interest rates again, and we will be able to get through the end of this year and into the first part of next year, where hopefully interest rates will start to come down with the almost undeniable arrival of a recession. Some things to keep in mind. Some of the reasons why we're still having some inventory issues is, of course, 87 million homeowners nationwide. Of those, 39% own their homes outright. 31% have 50% or more equity in their homes, and only 30% have less than 50% equity in their homes. So a lot of homeowners have a lot of equity, and that's one of the reasons why they are listing their homes, because they know that they can get into that bigger home because they're going to make so much on their current home. And they really just want that bigger home, and they really don't mind the interest rate. They know that they'll be able to refinance. But it is also keeping people locked into their home, because a lot of people, if they've got that 3% interest rate, they're thinking, gosh, it's almost cheaper for me to just keep this house and maybe buy another one in addition to this one and have this one as a rental. So we're seeing a lot of homeowners that are just wanting to hold on to their property. One of the things we're hoping, if interest rates come down into the 6s, that would give people a bigger reason to maybe part with their low interest rate and really move for the reasons that we always know that they move. We've had a lot of people born this year, die, get married, get divorced, all of those reasons that people move. We're having a lot of those things happen, and we're not seeing a lot of those homeowners put their homes on the market given the current situation. I know someone who has a very good reason to move. They would really love to get out of their current home. It's just got some bad memories in that home, and they would love to sell. But unfortunately, with current interest rates, they couldn't even afford to buy their current home with the current interest rates. So that's locking a lot of people into their current home. 89% of the population of homeowners have an interest rate of 5% or less. 75% have an interest rate of 4% or less. So that's the reason why people aren't putting their homes on the market. I think, and that's of the people that haven't, of those people that have mortgages. Obviously, people who own their homes outright are not considered into that figure. But we are seeing the housing market still moving. I know that I still have buyers that still want to buy a home. They're living with their parents and they're done, and they don't want to wait. I said, if you're going to wait for interest rates to come down, or you're going to wait for prices to come down, you're probably going to be waiting a really long time, potentially 4 years. If you want to take advantage of prices where they're at now, because we know prices are going to continue to go up, on average, you can count on real estate appreciating 4% a year. That's just on average. And we are seeing that trend continue. We're getting back to a normal market where we're going to see homes continue to go up 4% a year. So you know that you're better off buying a home now than waiting a couple of years if your situation is such that you're in a position to buy a home and you can still get approved with 7% interest rate, you should do that because prices are going to continue to go up. And even if interest rates come down next year, guess what's going to happen? All of those people that got off and took off and are waiting on the sidelines for prices to come down and waiting for interest rates to come down, when those interest rates do come down next year, which they will, when they do, you can just refinance with the property that you purchase now at a good price. Next year, that same house is going to be more expensive, and there's going to be more and more people bidding and getting in the way of you getting that home under contract. I know right now we're still seeing multiple offers. We're still seeing bidding wars. I had a property that went under contract this past week. We had 7 offers. I talked to another friend of mine, another realtor. She had her home on the market, her personal residence. They got 7 offers. So we're still seeing multiple offers. We're still seeing bidding wars, and that is only going to get worse if interest rates come down. So keep that in mind. You're better off buying now than waiting for next year. I'm Miranda Alt with Keller Williams Success Real Estate and the Miranda Alt team. Thank you so much for watching. As always, you can reach out to me at 815-529-0777. That is my personal cell phone. You can call me or text me, or you can email me at mirandaaltteam@gmail.com, or of course, always message me here on social media. Hope you have a great rest of your Tuesday. Bye.